PQ Limited, a company newly commencing business in 2020, 21, 22, has the following projected profit and loss account. So in the first line of the question itself, it is clearly mentioned that it's a newly commencing business, which means that the company does not have any opening stock of raw material, or opening stock of work in progress, or opening stock of finished goods. So no opening stock of raw material or no opening stock of work in progress and no opening stock of finished goods since it is a newly commencing business. Sales of the company is 2,10,000, from which cost of goods sold is subtracted 1,53,000. So that gives us the gross profit of 57,000. Administrative expenses 14, selling expenses 13,000. So totally it is 27,000. So 57 minus 27,000, we get profit before tax of 30,000. They have made a provision for taxation for 10,000 rupees. So profit after taxation is 20,000. The cost of goods sold has been arrived at as under. So here we have a cost of goods sold of 1,53,000. The breakup of this 1,53,000 is given below. Cost of goods sold contains raw material consumed worth of 84,000, wages and manufacturing expenses 62,500, depreciation 23,500. So totally it is 1,70,000. So this 1,70,000 is nothing but cost of goods produced. But out of the total finished goods produced, 90% of the goods is sold to the customers and 10% of the goods produced not yet sold. So this 10% is nothing but the closing stock or stock of finished goods, right? So the value of the finished goods is 17,000, which is nothing but 10% of this 1,70,000, because 10% of the goods is not sold. So if this is 100%, 100% is 1,70,000, then 10% of this figure is 17,000. So the value of the cost of goods sold is 1,53,000. The figure given above relate only to finished goods and not to work in progress. So this is extremely important to understand. Here the figure given above relate only to finished goods and not to work in progress means here we have a raw material consumption worth of 84,000. It means that this 84,000 rupees of raw material is consumed only in the finished product or finished goods. This 84,000 does not include the amount of raw material that is consumed in the work in progress. So listen, raw material is there in raw material is there in work in progress, raw material is also there in the finished goods, right? Because for example, let's say you are a table manufacturer, your raw material is wood. So wood will be there in the raw material and wood is there in the work in progress and wood is also there in the finished goods, which is nothing but table, right? So this 84,000 rupees of raw material consumed is the amount of raw material consumed only for the finished goods. This 84,000 does not include the amount of raw material consumed in the work in progress. Similarly, the 62,500 rupees of wages and manufacturing expenses also represents the amount of wages and manufacturing expenses incurred for producing the finished goods only. It does not include the amount of wages and manufacturing expenses incurred in the work in progress, right? So all the figures above relate only to the finished goods and not to the work in progress. Goods equal to 15% of the year's production in terms of physical units will be in process on the average, requiring full materials but only 40% of other expenses. So first let's understand the point till here. Goods equal to 15% of the year's production in terms of physical units will be in process, which means 15% of your total production is nothing but your work in progress. For example, let's say if you are producing 100 units, then 15 units is nothing but your work in process or work in progress. In this question, work in process is directly given in terms of percentage, so the time period for work in progress will not be given, right? Work in process is directly given as 15% of the year's production. On the average, requiring full materials, but only 40% of other expenses, which means that work in progress includes 100% of raw material and 40% of wages and other manufacturing expenses. I hope it is clear. So raw material is introduced into the work in progress at the beginning stage itself, or raw material is introduced into the production at the beginning stage itself. So work in progress includes 100% of the raw material, but work in progress does not include 100% of the labor or 100% of the manufacturing expenses. Because if work in progress includes 100% of wages and manufacturing expenses, then the product is complete. It is not a work in progress itself. It becomes a finished goods, right? So work in progress includes 100% of raw material and only 40% of wages and manufacturing expenses. The company believes in keeping raw material equal to 2 months consumption in stock. So raw material holding period is given. 2 months is the raw material holding period. All expenses will be paid 1 month in advance. So here all expenses means we are talking only about the wages and manufacturing expenses. It does not include the material expenses, because for material we have creditors for which separate time period will be given, right? So all expenses will be paid. All expenses will be paid 1 month in advance, which includes wages and manufacturing expenses as well as the administrative expenses and selling expenses. So if you are so basically it is a prepaid expenses which should be treated as a current asset. Then supplier of materials will extend 1.5 months credit. So the creditor period is 1.5 months. Sales will be 20% for cash and the rest at 2 months credit. So here receivables holding period or debtors time period is also given, which is 2 months. 70% of the income tax will be paid in advance in quarterly installments. So here provision for taxation is made for 10,000 rupees. Right? So let's understand this point. So 10,000 is the amount of tax that we are expecting to pay in the next year. But out of this 10,000, 7,000 rupees is nothing but prepaid, which is paid within this year. And remaining 3,000 rupees will be paid in the next year. So let's get back to the 7,000, but this 3,000 is going to be paid in the next year. So obviously this 3,000 becomes my current liability, but this 7,000 rupees is prepaid. So it is nothing but a prepaid expense. So it should be treated as a current asset. Should we treat the whole 7,000 rupees as a current asset? No, because it is clearly mentioned in the question that 70% of the income tax will be paid in advance in quarterly installments. So this 7,000 rupees is going to be paid in each quarter. We are going to pay it in equal amounts. So 1 year has how many quarters? We have 4 quarters in 1 year. So 7,000 divided by 4. So in every quarter we will pay rupees 1,750. Then another 1,750 in the second quarter. Then one more 1,750 in the third quarter. And one more rupees 1,750 in the fourth quarter. Right? So this 1,750 will be my prepaid expenses, which should be treated as a current asset. Next, the company wishes to keep 8,000 rupees in cash and 10% has to be added to the estimated figure for unforeseen contingencies. So after calculating the working capital, we have to add 10% for the contingencies. Then prepare an estimate of working capital. So let's start with the first working note. Working note number 1. First, let's calculate the stock of work in progress. So work in progress, as we already discussed, work in progress includes 100% of the raw material and 40% of the wages and manufacturing expenses. And in the question, it is clearly mentioned work in progress is nothing but 15% of the year's production. So work in progress is equal to, first, it is 15% of 15% of the year's production. So first, let's calculate the amount of raw material that is there in the work in progress, and then the amount of wages and manufacturing expenses that is incurred for the work in progress. If we add both, then we will get the stock of the work in progress. So first, raw material in work in progress. So listen, for finished goods, we have consumed raw material worth of 84,000. So this is for 100% of the production, which is nothing but finished goods, right? Out of this finished goods, 15% is my work in progress. So 84,000 multiplied by 15 percentage. So how much do we get? 15 percentage of 84,000. We get 12,600. So this 12,600 rupees is nothing but the amount of raw material that is absorbed or that is consumed in the work in progress, right? And work in progress also includes 40% of wages and manufacturing overheads. So then wages and manufacturing expenses. So what is the amount of wages and manufacturing expenses incurred for the finished goods? It is 62,500, which is for 100% of production. But one out of the 100% of production, only 15% is our work in progress. So 62,500 multiplied by 15% multiplied by another 40%. Why we are multiplying it with 40%? Because it is clearly mentioned in the question. On the average, requiring full materials, the work in progress requires 100% of raw materials, but only 40% of other expenses, right? So the raw material, in raw material, the raw material has consumed only 40% of the labor and 40% of the manufacturing expenses. So we are multiplying it with 40%. So 62,500 into 15%, we get 9,375, upon which if we take 40%, we get 3,750 rupees. So the total stock of work in progress is 3,750 plus 12,600, we get 16,350 rupees. So this is the stock of work in progress. So the stock of work in progress is nothing but the 16,350 rupees is the amount of cash that is blocked in the form of the work in process, right? Now, the question is silent about which approach we should use, whether we should use a total cost approach for calculating the working capital estimate or cash cost approach for calculating the working capital estimate. The question is silent about it. So if the question is silent, it is always better to use the cash cost approach for calculating the working capital requirement. And whenever we are calculating the, or whenever we are preparing an estimate of working capital, by making use of the cash cost approach, it is always better to prepare the cash cost sheet. So let's solve the second working note. Working note 2, cash cost sheet. So to begin with, starts with raw material consumed. Raw material consumed. See, generally, cost sheet, it starts with opening stock of raw material plus purchases minus closing stock of raw material, which gives us the raw material consumed. But here in this question, opening stock of raw material is 0, no problem. Then plus we have to add purchase of raw material. We don't know the purchases of raw material, right? Again, closing stock of raw material is also something which we do not know. So we are starting directly with raw material consumed, right? So raw material consumed is equal to, so listen, in the question, it is mentioned that 84,000 rupees worth of raw material is consumed in the finished goods. Fine. So 84,000 is the amount of raw material that is consumed in the finished goods. Plus, in addition to that, some amount of raw material is also consumed in the work in progress. So what is the amount of raw material that is consumed in the work in progress? It is 12,600, which we just calculated now. So 84,000 plus 12,600, we get 96,600 rupees. So this is the total amount of raw material that is consumed in the business, which is for both finished goods as well as for work in progress. Then wages and manufacturing expenses, wages and manufacturing expenses. So in the question, it is clearly mentioned that 62,500 rupees. 62,500 rupees is the amount of wages and manufacturing expenses incurred for the finished goods. So we are taking directly 62,500 rupees. In addition to that, wages and manufacturing expenses is also incurred in the work in progress, which is equal to 3,750 rupees. So we are adding that as well. So 62,500 plus 3,750. So the total amount of wages and manufacturing expenses is, if we add 62,500 plus 3,750, we get 66,250. Then next we have depreciation. But since we are solving the question using cash cost approach, we should take only the cash expenses. Non-cash expenses like depreciation should be ignored. So we are not going to include depreciation. So raw material consumed plus wages and manufacturing expenses, it gives us the gross factory costs. So 96,600 plus 66,250, we get 1,62,850, which is nothing but the gross factory cost. So gross factory costs is equal to 1,62,850 rupees. Now to this gross factory cost, if we are adjusting the opening stock of work in progress and closing stock of work in progress, we can calculate the cost of goods, produced or cost of production. So again, I'm repeating, if we are adjusting the opening stock of work in progress and closing stock of work in progress to the gross factory cost, we will get the cost of goods produced, right? So here, last year's closing work in progress is nothing but this year's opening work in progress. So at the beginning of the year, if you had any work in progress, that would have been converted into finished goods during the period, right? So while calculating the cost of goods produced, we need to add the opening stock of work in progress. But since it is a newly commenced company, they did not have any opening stock of work in progress. So it is 0 minus closing stock of work in progress. Why we are subtracting closing stock of work in progress? Because it is not a finished goods. We are calculating cost of goods produced. Work in progress is not a finished product, right? It is still in the form of, or still it is in the form of work in progress. Still it is in the process of converting in, still it is in the process of being into a finished product. It is not a finished product, right? So we are subtracting the closing stock of work in progress. So closing stock of work in progress, we already calculated in working note 1, stock of work in progress is 16,350. So minus 16,350 rupees. So when so 1,62,850 plus 0 minus 16,350, that gives us the cost of goods produced. Cost of goods produced during the period is 1,46,500 rupees. So let me explain this point once again. The gross factory cost is 1,62,850. If we are adjusting the opening stock and closing stock of work in progress to the gross factory cost, we will get the cost of goods produced. To gross factory cost, we are adding the opening stock of work in progress, because this opening stock of work in progress is nothing but closing stock of work in progress of the previous year, right? So opening stock of work in progress of this year would have been converted into the finished goods during the period, right? So we are adding it. But since it is a newly formed company, this company did not have any opening stock of work in progress, so it is 0. And from gross factory cost, we have to subtract the closing stock of work in progress, because it is still a work in progress. It is not a finished goods. It is in the form of, or it is in the process of being converted into the finished goods, right? So we are subtracting the closing stock of work in progress, which is 16,350. From where did the 16,350 come? It is nothing but from the first working note, which we calculate. right? So the cost of goods produced is 1,46,500. Now to the cost of goods produced, if we are adjusting opening stock of finished goods and closing stock of finished goods, we can get the cost of goods sold, which is from cost of goods produced. If we are adding the opening stock of finished goods and if we are subtracting the closing stock of finished goods, we will get the cost of goods sold. To cost of goods produced, why we are adding the opening stock of finished goods? Because opening stock of finished goods is nothing but closing stock of finished goods of the previous period, right? So opening stock of finished goods during the period would have been sold during this period. So we are adding the opening stock of finished goods. And we are subtracting closing stock of finished goods because it is not yet sold. So it should not be included in the cost of goods sold, right? So here we are subtracting closing stock of finished goods from cost of goods produced to calculate the cost of goods sold, right? And since it is a newly formed company, they do not have any opening stock of finished goods. It is zero minus closing stock of finished goods. So how we are going to calculate it? Actually, in this question, closing stock of finished goods can be calculated using two methods. First, here in the question, it is given that stock of finished goods is nothing but 10% of goods produced not yet sold is 17,000. Can we directly take this 17,000 and put it over here? We can't do that because the 17,000 is the stock of finished goods, but the 17,000 includes what? The 17,000 includes depreciation. But we are solving the question using what method or what approach? We are solving the question using cash cost approach. So depreciation should be ignored, right? So the closing stock amount includes depreciation. So we have to exclude that depreciation from the closing stock and write the remaining amount. So here, let's understand how did we get this 17,000 first, or let's understand the breakup of this 17,000. So this 17,000 is nothing but 10% of the raw material consumed, which is total raw material consumption is 84,000 for 100% of production. Out of 100% of production, 10% is not sold. So what is 10% of 84,000? We get 8,400 plus this 62,500 is for 100% of production. Out of that, 10% is not sold. So what is the amount of wages and manufacturing expenses incurred for the closing stock of finished goods? It is 10% of 62,500. We get 6250. And 23,500 is for 100% of production. Then for 10% of production, which is nothing but closing stock, how much it is? 2350. Right? Out of these three items, we can take the 8,400 because it is a cash expense, because this is nothing but raw material consumed. So raw material is a raw material expense is a cash expense. Why? Because you are actually going to pay the cash to the supplier. So 8,400 will be considered. Then wages and manufacturing expenses. This is also a cash expense because you have to pay wages to the laborers, for which there is an actual flow of cash from you to the laborers, right? So even this is a cash expense. But this 2,350 is nothing but your depreciation, which is the amount of depreciation included in the closing stock. But depreciation is a non-cash expense. To whom you are going to pay depreciation? Depreciation is not paid to anyone. So out of this 2,350 should be ignored. So what is the amount of closing stock of finished goods? It is 8,400 plus 6,250. We get 14,650 rupees. So this is the amount of closing stock of finished goods that needs to be added. We cannot add this 17,000 directly because it includes depreciation, which is a non-cash expense, right? Since we are solving the question using cash cost approach, depreciation should be ignored. So closing stock of finished goods is 14,650. So this is one way of doing it, right? Then there is an alternative way of calculating closing stock of finished goods, which is a simpler approach. So in the question it is given 10% of goods produced not yet sold. So here 10% we have, right? What is the cost of production we calculated? Cost of production we calculated is 1,46,500. This is for how many percent? 100% production. So for 100%, if it is 1,46,500, what is the 10%, which is nothing but 14,650, right? So closing stock of finished goods can be calculated using either of the two methods, right? So what is the cost of goods sold? We get 1,46,500 minus 14,650. We get 1,31,850 rupees. This is the cost of goods sold. Now to the cost of goods sold, if we are adding the admin expenses and the selling expenses, what do we get? So by adding admin and selling expenses to the cost of goods sold, we get cost of sales. So what is the admin expenses given in the question? It is 13,000. Admin expenses is 14,000 and selling expenses is 13,000. So admin expenses 14,000, selling expenses 13,000. So totally it is 27,000. So 1,31,850 plus 27,000, we get 1,58,850. Now, why it is important to prepare this cash cost sheet while solving working capital questions using the cash cost approach? Because while solving the estimate of working capital, we can take the figures directly from this, right? So we have raw material consumed, we have cost of goods produced, we have COGS, we have cost of sales. So by making use of these figures, we can easily estimate the working capital requirement, right? So now next, let's prepare the third working note 3, which is credit purchase of raw material, right? So we know the amount of material consumed, right? From material consumed, if we are adding the closing stock of raw material and subtracting the opening stock of raw material, that will give us the purchase of the raw material. Why? Because raw material consumed is, if you want to consume raw material, you have to purchase it. So this raw material consumed is purchased during the period. So we know the amount of raw material consumed, which is 96,600 rupees. 96,600 rupees. And to this, we are adding the closing stock of raw material, because closing stock of raw material is the raw material that we purchased during the period, but still we haven't used it, right? Now, how to calculate this closing stock of raw material? So during the period, what is the amount of raw material that we consumed? It is 96,600. So this 96,600 is consumed during the period, means for 12 months, we have consumed 96,600 rupees of raw material. So let's calculate the closing stock of raw material over here. Closing stock of raw material. So months and raw material amount. So during the 12 months period, we consumed raw material worth of 96,600, right? What is the raw material holding period given in the question? In the question, the raw material holding period is given as 2 months, right? Yeah, where it was given. The company believes in keeping raw material equal to 2 months consumption and stock, right? So for 12 months, if you are consuming raw material worth of 96,600, then for 2 months, what is the amount of raw material that you would have consumed? So just cross multiply, we get 96,600 into 2 by 12. So the closing stock of the raw material is 16,100. Now, what is the opening stock of the raw material? It is obviously 0. Why? Because it is a newly commenced business. So obviously they do not have the opening stock of raw material, right? And why we are subtracting opening stock of raw material from raw material consumed? Because Opening stock of raw material is nothing but closing stock of raw material of the previous period. So this opening stock of raw material is not actually purchased during this period. It was purchased during the previous period. So we are subtracting it. So purchases of raw material will be 96,600 plus 16,100. We get 1,12,700 rupees. So this is the amount of raw material that is purchased from the suppliers during the period. So now let's prepare the working capital statement. So we know that working capital is nothing but current asset minus current liabilities. So first, let's write all the current assets. So current assets. So the first current asset that we have is raw material stock or stock of raw material, stock of raw material or raw material stock. So during this period, we know that we consumed raw material of 96,600. So I'm just taking all the figures from the cash cost sheet that we prepared. So during this period, we consumed raw material worth of 96,600. This is for how many months? 12 months. Then what is the amount of raw material for 2 months period, which is the raw material holding period? So 96,600 into 2 by 12. So what is the amount of raw material stock that we get, which is 16,600. The same amount that we calculated over here. So you can also refer to working note 3 for this. So raw material stock, working note 3 or working note 4 it is. This working note 3, credit purchases. Fine. Then secondly, we have, after raw material, we have work in progress, stock or stock of work in progress. We already calculated the stock of work in progress in the first working note, which is 16,350 rupees, right? So stock of work in progress is 16,350 rupees. Then finished goods stock or stock of finished goods. So here again, we can pull the number from the cash cost sheet that we prepared. So here we saw that the closing stock of the finished goods is 14,650. So finished goods stock is coming from working note 2 and work in progress stock is from working note 1. Finished goods stock is 14,650 rupees. Then we have debtors or receivables, right? So we know that debtors should be calculated. We can calculate it either on the sales figure or we can calculate it on the cost of sales. But it is always preferred to calculate the debtors using the cost of sales because sales includes profit, right? What is the ultimate objective of preparing this working capital statement? It is to request for loan from the bank, right? If you are raising finance for your cost, that makes sense. But why do you want to finance your profit? Profit is something which you are going to get anyways, right? So it is always better to calculate the value of debtors using cost of sales. So here we calculated the cost of sales is 1,58,850, right? So for calculating debtors, we are taking 1,58,850. Now, what is the credit period given by the company to its customers? It is 2 months given in the question. The company gave 2 months credit period to its customers, which can be seen from here. Here it is mentioned. The sales will be 20% for cash and the rest at 2 months credit, right? So 1,58,850 into 2 by 12 and we should multiply it by 80%. Why 80%? Because 20% is cash sales. For cash sales, we do not have any debtors. We have debtors only for credit sales. So what is the credit sales? It is 80%. So multiply it with 80%, right? So 1,58,850 into 2 by 12 into 80%, we get 21,180. 21,180. Then We have cash, amount of cash given in the question, which is 8,000. So we are directly adding the cash 8,000 rupees. Then we also have some prepaid expenses given in the question. Prepaid expenses, right? So in the question, it is clearly mentioned that all the expenses are paid 1 month in advance. All expenses will be paid 1 month in advance. So we already discussed that all expenses includes wages and manufacturing expenses and administrative expenses and selling expenses. So wages and manufacturing expenses, what is the total amount? Is it 60 to 500? No. 60 to 500 is the amount of wages and manufacturing expenses incurred only for the finished goods. But we have also incurred some wages and manufacturing expenses in the work in progress also. So we have to take that also into consideration, right? So what is the amount of wages and manufacturing expenses incurred in the work in progress? 62,500 for finished goods and 3,750 for work in progress. So what is the total amount? We have to take this one, 66,250, which is 62,500 plus 3,750. I hope it is clear, right? So prepaid expenses, let me open a bracket, 66,250 plus admin expenses is 14,000 plus selling expenses is 13,000, and all these expenses are paid 1 month in advance, right? So into 1 by 12. So how much do we get? 66,250 plus 14,000 plus 13,000 into 1 by 12, we get 7,701 rupee. We get 7,770.8. We can round it to 7,701. Next, we also have a prepaid tax. Prepaid tax. We are not adding prepaid tax to this one because the time period is different. Prepaid tax, the tax is paid in advance on a quarterly basis, not on a monthly basis, right? So prepaid tax, we already calculated the amount over here. It is 1,750. So this is the amount of prepaid tax, right? So amount of prepaid tax is 1,750. So that's all we have for the current assets. So total current assets or total current asset is also known as gross working capital. So total current assets is equal to, so when we add all the figures, 16,100 plus 16,350 plus 14,650 plus 21,180 plus 8,000 plus 7,771 plus 1,750, we get 85,801 rupee. So it is rupees 85,801, which is the total current assets, which is also known as the gross working capital of the company. Now, from current assets, we have to subtract all the current liabilities of the company. Current. So let me write it as number 2. Okay. Okay, so let's say this is 1, then minus current liabilities. So the first current liability that we have in this question is the creditors, creditors of raw materials. So creditors. So how will you calculate the value of the creditors? So it should be calculated on the raw material purchase. So what is the amount of raw material purchased? It is 1,12,700. So it is 1,12,700 multiplied by, what is the creditors time period? Creditors, they are giving, I think 1.5 months. Yeah. So supplies of material will extend 1.5 months credit. So it is 1,12,500 multiplied by 1.5 by 12. So into 1.5 divided by 12. So how much do we get? 1,12,700 into 1.5 by 12, we get 14,087 or 8, we can 87.5. So we can round it to rupees 14,088. Then we have one more current liability in the question, which is provision for tax. So we already discussed it over here, the beginning of the question. So out of 10,000 rupees, 7,000 rupees is prepaid, but this 3,000 rupees will be paid in the next year. So it is a obligation that needs to be fulfilled within a period of 1 year. Right? This 3,000 rupees will be paid in the next year. Right? So it is a current liability. So provision for taxation, we have 3,000 rupees. And that's all. We don't have any other current liabilities in this question. So total current liability is total current liability is equal to, so 14,088 plus 3,000, we get 17,088 rupees. So let me write it as 2. Right? Now, what is working capital? It is nothing but current asset minus current liability. So here, current asset minus current liability is equal to, what is the total current asset? We calculated it is 85,801 minus the value of the current liability is 17,088. We get 68,713 rupees. 68,713 rupees. Is this the net working capital? No, because in the question it is clearly mentioned that 10% needs to be added for the contingencies. So 10% has to be added to the estimated figure for unforeseen contingencies. So to this current asset minus current liability, we are adding the 10% contingency. The contingency, the 10% should be added on this figure, right? So 68,713. If you take 10% of it, we get 6,871.3. So when you add, we will get the net working capital, which is nothing but 68,713 plus 6,871.3. We get 75,584.3. 75,584.3. So this is nothing but the amount of net working capital.